All right, guys, we have officially entered into a new month, which means it's time for another dividend portfolio update. Buckle up, because in this video, I'll be opening up my entire portfolio to you guys, where I'll show you everything, like how my stocks performed in the last month, all of my purchases in the last 30 days, and we'll also discuss which moves I plan to make in this upcoming month. Then after that, guys, we're actually going to get into a little Q&A, which is something we haven't done for a while, but I'll be answering some of your awesome questions, like where's the best place to start when looking at a company's financials, and how you should look at a stock's PE ratio when doing your analysis. And now, without further ado, let's get into it. All right, guys, now just getting right into it, I actually had a really solid month of growth in the month of July. These last 30 days were really good to me on the stock market. And as you can see, my portfolio is currently valued at $37,719.17. And my unrealized gain right now has climbed quite a bit in the last month. Right now, we're sitting at a gain of 5.19%. Compared to this time last month, it was only 1.56%, which represents about a 3.6% gain if my math is correct. And while we're on the screenshot, you can see last month my annual dividend income was $1,675, or basically, a dollar above that. But right now, guys, it's jumped to $1,707.77. So that's what, a $32 gain just in the last 30 days. I think that's really solid, but there is some discrepancy here between what my spreadsheet is showing and what is shown on my Charles Schwab on my brokerage account. Charles Schwab actually has me at about $1,715.39, and I have noticed that on my spreadsheet, it does tend to vary day to day, and I think part of that has to do maybe with some of the stocks in my portfolio like JEPI and XYLD, who tend to pay a different dividend every single month, so there is some variance there, but I'm going to go with that higher number. Now, moving on and getting into my best and worst performers in the last month, as you can see right here, we had a few stocks that did double digits just in the last 30 days. I mean, Main Street Capital Corporation is up 15.5% in the last month. Starbucks has climbed, which I've definitely noticed in that share price. It's climbed about 11% in the last month. Snap-on as well, which is a stock that I've been contributing a little bit to, which we'll see in just a moment, but that's up another 10% in the last month. And then we had some others still perform really well. Lowe's with a 9.2% gain, 3M up 7.7%, Southern Company up 7.4%. Going down the line, a good handful of other stocks that did really well. And actually, let's scroll back up here and recategorize this by worst performers at the top. We can see that I had some not do well as well, starting with AT&T, which was my worst performer, down about 10% in the last month. This was due to their recent earnings release. Verizon, kind of a similar story, down 9.73% in the last month. But then the rest of the stocks in the red, it's not looking too bad. I mean, Lockheed Martin down 3.5%, and then we have some others that are down, 2% and below, so not too bad. All right, guys, now moving on and getting into my recent purchases in the last 30 days, I've been a very busy boy, as you can see, and I've contributed to a good handful of positions in my portfolio. Starting at the top here with Intel, I invested $150 into Intel and picked up just over 4 shares of that company, which in hindsight, guys, I probably should have held off, because as soon as they released their earnings report, I mean, a lot of you guys already know what happened. Things just really went south for this company after that. But anyway, moving on, I also invested $150 into Lowe's and picked up 0.85 shares of that. Moving on, I dabbled a little bit into Starbucks. I mean, they've definitely had a really good month, but I still have a good opportunity to average down. So I invested $75 into that and got just about 1 share of Starbucks. I also threw $150 at Snap-on and picked up 0.73 shares of that. And the last individual stock I bought in the month of July was Verizon, and that was my most heavily contributed to position. I invested $225 into that and got just under 5 shares. And in addition to those individual positions, I also invested $200 into my Roth IRA, bringing my total contributions for the month of July to $950, almost 3 figures in the month of July. Not too shabby, guys. But anyway, on that note, talking about my Roth IRA, I just want to give you guys a quick little update. I don't really talk about this portfolio a lot just because there's really not much to talk about. It's totally hands-off, totally automated. And, all of this portfolio is just 5 different ETFs. But anyway, guys, I had a really solid month in the Roth IRA. As you can see, I just crossed the 1,800 mark in this portfolio, and just in the last 30 days, I gained about 3.4%, not too shabby. But all time, I'm still down about 11%. So there is that. I started this portfolio back at the beginning of the year in January, like right after the turn of the year, and I bought probably somewhere towards like the top of the market. So it's no surprise that I'm still down in all of these positions, really. All right, now moving on, talking about my watch list a little bit, guys. If you remember from last month's portfolio update, I've separated my watch list into 2 different lists. I have my due diligence list, which is all of the companies that I still need to do some research on. And then I have my buy list, which is the companies I'm sure I want to add them to my portfolio. I'm just waiting for the right price. Now, getting into my due diligence list, because that's the only place I made any changes, guys. There's a couple things that happened. First of all, I added 2 new positions to this list. I added RHI, which is Robert Half. I also added WSO, or Watsco, right there at the bottom. Both of these are companies in the industrial sector that I think have pretty solid financials from what I've seen. I still need to do more research, but I do plan to make a video on both of these stocks in the next couple of weeks, so stay tuned for that. And that brings me to the next thing I want to talk about, guys, which is my future plans for this portfolio, basically the moves that I plan to make right now in the month of August. And first things first, as you can see, I have a good chunk of change that I could deploy and buy some more stocks with. Some of this is birthday money that I received in July. Some of this money is also dividend income that has yet to be deployed because I turned my dividend reinvestments off last month, which you guys might remember. And having said that, I don't think I'll be adding to any new positions this month. The 2 stocks that are currently sitting on my buy list, Target and Apple, both seem to be moving in the opposite direction of where I want them. So I'll just be deploying this money into stocks already in my portfolio. Probably will be looking to average down on a few positions. Maybe I'll add some more Starbucks. Maybe I'll add some more Snap-on. Maybe I'll add some more Verizon. Who knows, guys? We'll just have to stay tuned and see what happens. Now, that's pretty much all I wanted to share in terms of my monthly portfolio update. Now, moving on, let's get into the Q&A segment of this video, starting with this very first question coming from Zach Acosta in the Discord group, who says, as a beginner investor, where would be a good starting point for looking into a company's financials? I want to strengthen this area for my investing. Zach, that's a really great question. Thank you so much for asking. And real quick, guys, if you want to join the Discord group, it's totally free. There's a link to it in the description of this video. Definitely click on that, join the group, come hang out with about 1,000 other dividend investors. All we're doing in there is talking dividend stocks, sharing our portfolios, sharing our stock research. It's just a really positive community, and I'd love for all of you to be a part of it. Now, getting back to Zach's question, there's a few easy metrics that I think you can look at that would be a great place if you're just starting to research a company's financials. So we're going to use Apple here as an example, and the first thing we're going to do is go over to the financials tab here on Seeking Alpha, which is the platform that I use to do all of my stock research. There is a link in the description of this video if you guys actually want to save $40 on Seeking Alpha Premium, which is what we're looking at here. Hands down, my favorite platform. I love using this. I'm on here multiple times a day, and it's just been a really great resource. But anyway, over here on the financials page, we're taking a look at Apple's income statement, and the first thing that you should probably look at is the revenue, the top line growth, the sales. Are they increasing this year over year or steadily over time? And we can see in Apple's case, they definitely are, which is a good sign. Now, the next thing that I think you could look for that's pretty easy to find is the earnings per share growth. And it's the same thing as revenue. We typically like to see this going up over time, trending up and to the right. And that is most definitely the case with Apple. Maybe not every single year, but on average across time, this is increasing. So that's a really good sign. Another important thing to look for is shares outstanding. We want to see that going down over time. Ideally, we don't want companies diluting the shareholders or increasing the shares outstanding over time. And once again, in Apple's case, that is a box that we can check. We see the shares outstanding decreasing over time, which is fantastic. And there are 2 other quick metrics that I think are important to look at when researching a company's financials, especially if you're just starting out. So scrolling up, going over to the balance sheet now, let's scroll down to the bottom and take a look at the debt situation. So you can look at total debt, or you can take a look at the net debt, which basically takes the total debt minus any cash and short-term investments. And ideally, we want to see the net debt trending down over time, or at least not substantially going up. And we can see that in Apple's case, we can see it from the numbers in the parentheses here, they have a negative net debt. Now, lastly, this one is important for dividend investors. Scrolling up, going over to the statement of cash flows, let's scroll down and find the free cash flow per share. Now, the free cash flow is what companies use to pay the dividend, and as you can imagine, we want to see this increasing over time as well. And that's another box that we can check for Apple. It's just going up and to the right. Maybe not every single year it's happening, but across time, on average, the free cash flow per share tends to be going up. And the other thing that I would recommend for Zach or anyone else who wants to learn more about researching a company's financials, pick up this book right here. This is Warren Buffett and the Interpretation of Financial Statements, and it goes through every single line item on the income statement, the balance sheet, and the statement of cash flows, and it explains to you what it means, what it does, and how it relates to, other metrics on each of these 3 financial statements. But it's super easy, very digestible, and just a really great reference. I refer to this quite often when I'm doing my stock research, and it's been a huge help for me. With that said, I've included a link to it in the description of this video. video. You can buy it from Amazon. Super easy, super cheap book too. It's a great thing to keep around. All right, now moving on to the next question. This one came from Kay Lewis, who wants to know, how does the price to earnings ratio play into choosing stocks? And that's a fantastic question. And let's use Stanley Black & Decker here as an example, who actually has really not had a good year. They're down over 50% in the last 365 days. But anyway, taking a look on the right-hand side of the screen, their PE ratio is 11.16, which for us means we'll have to invest $11.16 to receive $1 in earnings from Stanley Black & Decker. And how we use this metric, how we use the PE ratio, is we use this to help identify the value or how affordable a company is. And we can compare the PE ratios between two different stocks to see which one is more affordable or at a better value. And we can also use that to compare to a stock's historical average. Now, to do that, let's actually go over to the valuation page right here. And as you can see, Stanley Black & Decker with an 11.16 PE ratio is about 30% cheaper than some of the other stocks within the sector, with the sector median PE ratio being 15.93. So this does mean sector-wide, Stanley Black & Decker does appear to be at a relatively better valuation, if that makes sense, or it's a little bit more discounted. Now, taking a look at Stanley Black & Decker compared to its historical 5-year average PE ratio, which is 17.6, we can see that on the far right, it's about 36.5% lower than that. So it's at a much better valuation compared to where the company has been, which is no surprise. If we go back to the summary page, like I said, in the last year, it's down 50.5%. So it makes sense that we're seeing Stanley Black & Decker at a more affordable valuation than other companies within the sector, and most definitely compared to itself on a historical average. Hopefully that makes sense. We can consider stocks with a PE ratio below 20 to be, worth further exploration, but I'll tell you what we really like to see are stocks with single-digit PE ratios, which there's a handful of them out there right now. We can look at companies like Whirlpool, ticker symbol WHR. We can look at Altria Group, ticker symbol MO. We can look at Williams-Sonoma, WSM, Walgreens Boots Alliance, WBA, AT&T, and Verizon, just to name a few. And with that said, I actually covered a handful of those single-digit PE ratio stocks in one of my recent videos right over here talking about the best dividend stocks to buy in August. So if you want to check those out and learn more about some awesome, really cheap dividend stocks, then click on this video right over here, and I will see you in the next one.